Albus is saying, I wanted to know about trading stocks. Any tips on when to buy and when to sell? Yeah, just be very, very long-term focused. Very long-term focused. Take my complete financial analyst trading course. Training course, not trading course, training course, because I'll teach you how to be a long-term investor. And when you invest in stocks, I recommend that you look at investment criteria in this order. Number one, fundamentals of the company. Number two, valuation. And number three, distant third, if at all, technicals. Fundamentals, F. Valuation, technicals, FVT. Okay. And the only reason to look at technicals at all is so that you can understand maybe when to add to a position or take some profits if it's overbought or oversold. And the metric you can use is the RSI, or Relative Strength Index, which works sometimes. I certainly don't make that my number one investment criteria, but sometimes stocks can be overbought or oversold, and then mean reversion kicks in. So if too many people buy a stock in a short amount of time, then there's not that many incremental investors that are going to buy that stock in the near term. And so the RSI might be high, the Relative Strength Index, and so it pulls back. Vice versa, converse logic is true if too many people sell a stock. I usually like to buy stocks or add to positions that I own forever that are massively oversold. Massively oversold. So let me show you what that means really, really quickly. Again, I'm not a believer in trading. I believe mainly looking at fundamentals and then valuation. So let me type up, I don't know, let me see, Apple, I guess, AAPL. Okay. And this may work and may not. But if we go here to a chart, let me see if I can open this bigger here. All right, good. And what I'm going to do is I'm actually going to go over here and add an indicator called Relative Strength Index, okay, which is just a mathematical calculation for is something overbought or oversold. And so when it's 80, that means it's overbought. It means you sell. When it's 20, it means it's oversold. It means you buy. Of course, look at fundamentals and valuation first. Let's go check it out. All right. So let's take a look here. So it doesn't always work. It doesn't always work. But right around here, it's not perfectly 80. It was somewhat overbought. Okay. And down here, it's kind of oversold. It doesn't always work. But that's what people look at anyway. So let's go back further. So in a more normalized environment, June of last summer, okay, of 2019, right here, it went down a lot, man. And it was at an RSI of around 20, oversold. And then it went up a lot here. And then here was overbought, then oversold, rinse, lather, repeat. Doesn't work out perfectly. I think it's a little bit ridiculous, to be honest. But anyway, people tend to look at that pretty closely. And sometimes it becomes self-fulfilling if something is massively overbought or massively oversold. You know, one of the issues, though, is that technicals are becoming a little bit less relevant now because there's a lot more people that are investing not in stocks, but in ETFs. And so if people sell the heck out of ETF index funds, then it kind of drags all stocks down and vice versa. Yeah. So it's getting harder to generate alpha as an investment manager now, meaning how much you outperform the index by, because the correlation between all stocks has gone up materially because of index funds and also because of machine buying.